Discussing the Tesla price decrease today. On the one hand, very good news because this is the beginning of the deflationary trend in the economy. So that should be good news for the Fed and interest rates and generally commodity prices coming down. On the negative side, though, I mean, the price decrease is always driven by the demand pressures, by competition, and there's no good way to paint this other than, well, they have to lower prices to, and then that's the big question, to do what? And this is, again, this is the good thing about Tesla. Tesla is not lowering prices to keep market share or something like that. Tesla wants to grow 50% volume, and therefore they need to lower prices. By the way, this is in China, just to be clear. And it's not even confirmed by the company. It's just that their prices on the website are lower, and in general, the anecdotal evidence is that they're lowering prices. So what does this mean for us, and how do we think about this? I think there's really two important things to be clear about here. Number one, lowering prices for Tesla is a good thing because Tesla's maximizing volume. And number two, maximizing volume is a good thing because you want to have a large installed base. This will continue to drive your business. This is kind of like the Apple business, where the more iPhones you have in circulations, the more people will keep buying the iPhones, the more software you can sell them, the more ancillary businesses you have. And in the case of Tesla, of course, the full self-drive is the big gorilla in the room here. The more installed base you have, the more full self-drive software you can sell eventually to those customers. This is the Not Even Wrong podcast. It's October 24th, 2022. This is Krim Delco. For the day, the fund is down 1%. The market is up 1%. For the year, we are down 49.8%. The market is down 19.9%. We're underperforming by 30.9%. So Tesla probably announced the price decrease in China today. It's not confirmed, but let's assume it's a fact. And we don't know how much. The Reuters news is up to 10% and so on and so forth. It all doesn't matter. Let's just focus on the fundamentals. What does it mean? What does a price decrease mean? How does it flow through the P&L? What does it mean for Tesla, for the growth, and for the stock? This is really what matters here. So let's start with the price decrease. Let's assume the average price decrease is like 6% ASP this quarter. So let's assume they lower prices in China, maybe even in the US. So if we get a decrease of ASP of, let's say, 6%, we go from 50,000 to something like 47,000. And then we have, of course, the question then is, what is this going to do to gross margins? And I think the key here is to understand that we're going from about 365,000 produced cars to roughly 460,000 produced cars. This is kind of the guidance of the company. They want to grow 50% at least, if not more. Let's assume they can do that, and let's assume they deliver as many cars. So maybe they produce a little bit more, but they deliver about 50% more cars than they produced in the third quarter. So we're in the 465,000 range. What that does is that amortizes the factories across the globe that they have, the 4 factories in California, in Berlin, Austin, and Shanghai. It amortizes across more cars. So we expect, therefore, depreciation to come down. Let's say if depreciation per car is something like $3,000, we expect that to come down to $2,000, which is $1,000. That's quite a lot per car. So we have less per car of depreciation. We also assume material costs and all that kind of stuff is going to come down, let's say 5-6%. We assume battery costs come down because they continuously come down. We assume OPEX to grow maybe 1 or 2%. So overall, we have a decrease in the cost of per car of, let's say, roughly 10%, something like that. So we could have, actually, what this means overall is we could have higher gross margins than in Q3, even though we have lower ASPs. And this is the way we think about this company. They grow and grow and grow, and they actually keep their gross margins, if not increase their gross margins. Lowering ASP is not a bad thing in the case of Tesla because the math we just did, it's not the end of the world because we actually have higher gross margins. Now, what it means in absolute dollars, yes, we have 50% volume growth, we have only 40% sales growth, 30% gross margin growth, and that is, kind of a declining, but we have 70% operating income growth and more than 100% EPS growth. Now, that is probably not what the street is most focused on. The street is most focused on sales growth. If you look at most large companies, over decades, they tend to perform as well as their sales growth. So this is what most businesses are really mostly interested in, is sales growth. So if Tesla's sales growth is 40%, and we expect this to continue to maybe decline even relative to volume growth, that explains why we have a multiple compression in the stock. I think this is the most significant thing that is negative to the stock in terms of, well, you want to grow 50%, but you can't grow your sales 50%. Hence, I have to punish you a bit. Now, here's the thing that we think today actually is a very, very good news day, and I think the market has reacted accordingly. That's why the whole market is up, even though Tesla is down 1%, which is fine. The thing is that in our view, this is the beginning of the end of this whole inflation craze that we had in the last 6 months. This is also, of course, good news for the Fed. The Fed can stop raising rates and all of that stuff. I think from the Tesla perspective, Tesla is a large industrial company that has a tremendous market share. So you can look at their actions as kind of not a monopolist, but somebody who has a lot of degrees of freedom and is not constrained by competition because people want their products. And when they decide to lower prices, it's because they can. They can because their costs are such that they can afford that. And we believe that Tesla will print a higher gross margin per automotive gross margin next quarter. So this is good news. This is a good thing. And we can't emphasize enough the importance that even though this is now all a macro conversation, there's also a very focused Tesla conversation to be had. And the Tesla conversation is that you want to have a large installed base. Elon Musk has said many, many times that he wants to focus on volume growth. And he's not saying it, but the reason he wants to focus on volume growth is, of course, to bring as many electric cars as possible into the hands of customers, to increase the word of mouth, and in general, to increase the installed base, because we're going to have more and more software sales at some point. This is not happening right now, but it's going to happen. And by the way, it's not just software, it's also insurance, energy, all of these kinds of things. The more Tesla customers we have, the more other things we can sell on top of the car, and therefore the margins and sales growth at some point will re-accelerate. This is the key. Once that happens, of course, the stock will explode. This is our expectation. And therefore, we believe that the fundamentals of Tesla right now are incredibly, incredibly strong. We still have strong demand. With the backdrop of a weak macro, we still have very strong demand. And we have the ability to lower prices, which is actually very positive for Tesla and for the macro environment. So to summarize, today's price decrease news of Tesla, in our view, is very, very good news. It's very good news for two reasons. One is it lowers the inflation risk that we have on the macro side, and it increases the potential for Tesla to keep growing the installed base of 50% plus. And at some point, that will also translate into an acceleration of revenue. Right now, that's not the case. That's why the stock is being punished, and that's why we have a little bit of a multiple compression. But when we did our math, we showed that with this lower of ASP, we can still have higher gross margin. I'm talking automotive, by the way, here. And that's very, very important. We might have lower sales growth in dollars, but that, again, will re-accelerate at some point, because the higher installed base is what really matters for Tesla for reasons of penetration, of transition to sustainable energy, and also for profitability, because the higher the installed base, the more upsell we can have through software and other services. Thank you.